now streaming live onto our YouTube channel. Yeah. It is high time we now streaming live onto our YouTube channel of today. So today we are looking at the RSI divergences. We have had a clue in the past, but maybe here and there we did not finish up the task. That's why I thought it was very, very crucial and important for us to come back and alliance with the same topic. Okay, so the RSI divergences. Is my screen clear? Let me know if my screen is visible. Yeah. All right, guys. So last week on Friday, we talked about these divergences, meaning that a divergence or an RSI divergence is basically a trading period through which there comes a moment in the market when the movement of the RSI is not moving in the same direction with the movement of the market. So if these two if these two are not corresponding in movement, that is what we call a divergence. Okay. If these two are not moving correspondently, that is what we call a divergence. So we said that the RSI divergence can basically form two moves. It can form and move to the upside, or what we call an upward movement, or it can be moving in a downward movement. So both are common. So we named them in two ways. We called one the bullish divergence, and we called another a bearish divergence. And we said that the bullish divergence will apply if you want to trade any cryptocurrency but expecting an upward movement. So if you want to trade any cryptocurrency but you're expecting an upward movement, your first step is going to make sure that you find a coin that is on a downward movement. You don't need a coin that has over-dipped, but you just need a cryptocurrency that is making a downward movement to be able to win this trade. For example, in our screen here, we have an RSI. We have an we have price action or price making what we call lower lows. Okay, lower lows, lower lows, lower lows, lower lows. Then when we come this side on the RSI, we are finding, so in simple terms, the RSI is making higher lows. So instead of it continuing going down, you find that it changes its movement. And what we say to help you simplify the task of your trading experience, you're going to just make sure that you connect these points together. You just connect these points together. And where you find a difference, for example, here, you find that you connected this point to this point moving down. But when you came to the RSI, you connected the same points in an upward movement. This is what we call a bullish divergence. The market is forming lower lows, while the RSI is forming higher lows. So those important points are very key when it comes to you making a decision to use the RSI divergence. That's what we saw on Friday, and we insisted and gave an example that you're going to connect these points together, those V's. You're going to connect them together, ladies and gentlemen. You're going to connect this one to this one, this one to this one, this one to this one. And as you do the same thing in the chart, so also the other side on the chart, you're also going to connect. And where you see a difference, you can even change the color. The change of the color is to just help you. So you connect this one to this one, this one to this one, this one to this one, this one to this one. Okay. Now you also do the same with the RSI, where you see a divergence or a change. Where you see a change, you change the color. So this is where the divergence happens. We also went ahead and said that you need to note where you see divergence, in most cases, the market moves very fast. So the divergence is where our business is. Yesterday, during our class, we said that there is what we call longing a market and shorting a market. And we said shorting a market, you are saying you expect the market to go down, while longing a market, you expect the market to go up. So if you had said that this coin is going to continue going up, if you see a divergence, you need to close that trade, because like it or not, the market's going to change direction and it's going to move in an upward movement. Just a minute, ladies and gentlemen. Okay. So if you expected the market to go up, close the position, meaning sell off, because the market's going to change, because where the divergence happens, the rise of the market happens immediately. Just to follow through, are we following? 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 All right, okay. So remember, as professional traders, that's why yesterday we introduced futures. We are not going to talk about only trading in one-way market, because we are building professionals, okay? So we must be able to take advantage in the market, whether the market is good or the market is bad. So you must be able as a trader to see that you are finding opportunity when the market is rising, and on the other side, you are finding opportunity when the market is going down. Okay? But in the crypto ambassador strategy, you'll find that very soon we are going to start giving you signals. But you'll find that our signals will only be short signals. Okay? Where we expect the market to go down, you may not see long signals. Not because they don't exist, but we shall keep buying the market to the upside in the spot market and buying the market to the downside in when the market is going down. That will be our approach to keep things very simple. And very soon, when this week ends, starting Monday next week, you will be seeing two types of signals coming in your chart. And we want you to pay very close attention. Make sure you understand what we are teaching. In the past, and through different groups, this is just something to pass through. I have had complaints, and I thought right today, before I go very far, as I drop you signals to talk about this. There are people who complain, and they complain the following. Can't you teach these things to us on a personal basis? When someone brings me the business, they need to fix time and teach me these things on a personal basis. How many people believe that is the best way to help you make money? Let me see. How many people are here and you say, this is what I want. So when you start, we should teach you on a personal basis so that you make money. We do one-on-one with you. I have seen many people complain. You bring us, you don't teach us things on a personal basis. Oh, you are very bad leader. Me, I need it one-on-one. Guys, what we have put around, thank you, Mama. What we have done, meeting, call you later. Meeting, call you later. Okay, so ladies and gentlemen, no, it's yours, it's yours. Just a minute. Ladies and gentlemen, it is very hard. Okay. When you attend these trainings that we do here, those who have been with me for some time, you'll understand one thing, that I keep doing the same thing over and over and over until you understand. Give me a yes in the chat, please. I'm in a meeting. I'm in a meeting, please. I've told you. Genda. So, I would request that you just keep attending trainings. Is my message home. If you don't understand today, please attend tomorrow. I keep repeating. I keep repeating. So if you don't understand today, attend tomorrow. Don't say, don't give up. Just because I will keep repeating on the next cycle, we shall repeat the same thing. After these classes have ended, I will still come back, teach the same thing, 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 until you understand. So I would request, because someone wrote to me a very long letter, that we should find a way, especially the slow learners. Even if you're a slow learner, since I keep on repeating these things, you will get them. unless it's you who has refused to understand this concept of coming in trainings over and over and over. Give him a paid version. Me, I can't. I don't have the time. Yeah, me, I don't have the time. Because my 1 hour is equal to $1,000. 1 hour. People usually come to me, special. Me, you must meet $1,000 for 1 hour. If you can't, don't waste time. $1,000 for 1 hour. So don't come. Just stay. You even have $500 capital. Just come here. I give you everything for free. So don't look for me. Hey, I need this peso. 1,000. But even when you pay $1,000, we might finish the class when you have not understood. Give me a yes in the chat. So this is the best way. So stop bragging with your 1,000. You might pay it, and by the end of the 1 hour, you have not understood. Now see this one. I want to set up my Binance exchange automatically. Let me just move on now. So how do we find a divergence? How do we find a divergence? Okay. So when we are looking for a bearish divergence, step by step, number one, when we are looking for a bullish divergence, we are going to find a coin on a downtrend. When we are looking for a bearish divergence, we are going to look for a coin that is on an uptrend. Meaning that if there is any coin you see in your royal queue that is moving up, start smiling that you are going to find an opportunity to make money when it's moving down. Is that clear? You are finding a coin, it is bumping. Start smiling, because in our new class that we are repeating even today, you are now going to find an opportunity when it is moving down. So after finishing it, when it is moving up, if it is available in futures, we are going to also trade it when it is moving down. And this is what we call shorting the market. Are we clear? So we are not going to only make money when this coin is pumping. We are also going to find opportunity when this coin is going down. And that's what I'm talking about right now. Are we connecting? Give me a one if you are connecting. Give me a one. Give me a one if you are connecting. Now, someone has $100. They want to automate their Binance. There were people who are broke want shortcut to success. Yeah. That's how I used to think when I was broke. I wanted to be a millionaire the next day until I changed my mindset. There were people who have $100, 500. They want to automate their robots. You even wonder. Chai. Hey, there were people with $100. They want to be making $60, $50 a day, 90, 1,000. You wonder whether their $500 could make $1,000 a day. You see, my leader tell me, how can I be like making $200 with my 50 per day? So when you join, they told you this is a money printing machine that it will just get things jump in the air. A microwave generation. Yes, they want to microwave everything. They say, if I have 100, can I be making like $70 a day? And when they come here on such trainings, it's like you're wasting their time. We continue. Continue. Okay, now, how are we going to find a bearish divergence? Number one, we are going to find an uptrend. We are going to find a cryptocurrency that is moving in an upward movement. Here, we want to watch an uptrend. We are looking for a change to a bearish move. So, previously, we have been finding opportunities when markets are just moving down. We are also going to look at coins when they are moving up. For example, a coin moves up, you see Royal Q. New sale, new sale. And someone is like, oh, Loichu doesn't work. Loichu doesn't work. You see, new sale, new sale, new If not Loichu, me I no go do this crypto business, me I no go do. If it is Loichu, me I go do this crypto business, me I go to retirement package. Let's go back. Let me first finish the class. This robot, where did you come from? This robot, where did you come from? Hey, I'm in class. So we are looking for continuous higher highs. The market goes up. Sometimes I forget. The market goes up, comes down, goes up again, comes down, goes up again, comes down, goes up again. So we are looking for a cryptocurrency that is forming these higher highs, these higher highs, these higher highs. So what are we looking for? We are looking for an opportunity where this coin is going to make a retracement and move down. Hey, sometimes I forget that I'm in class. So we don't need to find a long-term uptrend with dozens of higher highs. Just a couple are enough. Like, let me show you an example. Look here. We find continuous series of upward movement. Remember, when a coin is moving up, it forms this higher high, then it breaks it. When it retraces here, we expect it to go higher. It retraces, we expect it to go higher. So you see? So since this is a higher high, this one is higher than this one. That's why it's called a higher high. This one is higher than this one. That's why it's called a higher high. That's the logic. So there is no logic. This high, this high here, if drawn a line, is higher than this high here. That's why it's called the higher high. This high here is higher than this one. That's called a higher high. Simple logic. So there is no mangulini. Now let's continue. Now, as we look at the market, we are also going to look at what the RSI indicator is doing. Okay? So the market is forming higher highs. Also, we need to look at the RSI. High. So when we connect this one to this one, and we connect this one to this one, this is sloping down, while up there, it is moving up. So that's what we are saying. Step 3, connect. We connect the higher highs we have found. First, we connect the higher highs of the price. Then we connect the same higher highs of the RSI. We can use different colors to visualize better if the highs were higher or lower. Okay, so this is automatic. Then we come to the RSI, we shall connect this to that. And you see here we move down a little bit. Now, this downward movement, instead of us doing like this, then we do like this. This one is diverting from what is happening up in the market. Anybody following? Anybody following? Anybody following? Anybody following? you go to the chart, the market is moving up. You connect these high points together. Okay? But when you look at your RSI below, you have connected those above instead of the RSI, because also the RSI had to just do the same thing, ta, ta, ta. But for it, you are connecting this to this. Now, this is diverting from what is happening in the market. Now, that is what we call a divergence. So we have found a divergence, and I hope you can see Tata. I've told you this happens immediately and the market goes down. Now, by now, I hope you know how to find a bullish divergence and a bearish divergence. Give me a 2 in the chat if you can find the 2. A bullish, we are looking for a downward movement. A bearish, we are looking for an upward movement. Is it okay? Give me a 2 if you now can find the 2. Then I'm going to teach you how to make entries and exits. Okay. When I say God is in my savior. Now, people without skills, the whole night they made nothing. People who don't add capital in their business, they are ever complaining about floating loss. I would have continuity. I would be a rich man. I would have a better life. But the way they don't add, you don't add capital and you expect things to just happen. Yet when the market is going against you, don't want to add capital. Now, triggers to trade divergence. Method number 1, the pullback after the divergence. For this method, we wait for a pullback after the second point of the divergence is found. In case you are wondering, a pullback, it's just a small move against the trend before the price returns to the trend again. Let's look at a scenario of a bearish divergence. The key here is to wait for a failed pullback to the upside. So I'm going to show you. As price falls to a continuous, to continue to initiate the trade or a reversal is more likely to happen. No, me, I don't want to overteach. Now, this is the ideology. You saw the divergence on the RSI. You are planning to enter the market, but you don't want to make a false entry. What do? This is very important. You know, when the market is moving down, like here, you see it tries to move up before it continues going up. So you wait for the pullback. Like the market went down, then it tries like it is moving up before it continues to the downside. I don't know if that makes sense. I don't know if that makes sense. I don't know if that makes sense. Remember, when we are trading, we still use support and resistance. So if this was our resistance, this was our support. So when you see the divergence, don't get excited. Wait for this coin. This is strategy number 1, to pretend as if it is moving up. So we are waiting for a failed pullback, because if it was a right pullback, it would just do like this. Okay? But because we have a divergence, this is going to be a failed pullback. Okay? So wait for the pullback. Then after the pullback, make your entry. make your entry. Make your entry at the break of the last candle of the pullback. Make your entry. So this is the pullback, okay? So when you see the pullback, draw a line at the pullback. We are going to go practical. You are going to draw a line at the pullback. So after the second candle, enter at the break of the last candle of the pullback. Okay? So once this breaks, closes below the second candle, make your entry. Meaning, you're going to draw a line at the second candle. Once a red candle starts above and closes below, make your entry. Take your profit at the support. I'm going to show you when I go practical. Now, I hope, so that is the first thing. The second method, so that it was the divergence. I hope you remember this. Do you all remember the divergence? Give me a yes in the chat. So you look at the chart, it rises, you see the divergence, wait for the market to try to pull up. So as it is trying to pull up, draw a line at the second candle. If a red candle starts above and closes below, it has broken this. Make your entry, plan your exit at the support. Is that clear? Is it clear? Is it clear? So it means you'll be shorting the market. You wait for the pullback. You wait for the pullback. Draw a line on the last candle of the pullback. Once a red candle starts above and closes below, make your entry. Next method of trading. The pullback after the moving average breaks. This method uses moving averages. I haven't explained moving averages. I don't know how I'm going to survive. I don't know how I'm going to survive. I think tomorrow I'll do moving averages. Let me try to explain. Let me try to explain. Okay, what can I explain? Now, in your chart, I hope I will do tomorrow. We have what we call moving averages. I'm going to do moving averages tomorrow because there are 3 types: weighted moving averages, exponential moving averages, and these ordinary simple moving averages. But I'm going to go into these details, I think, tomorrow. But this method of using moving averages, it is the best to use for long trades if you want to enter a market that is moving up. What are moving averages in short? Moving averages are just lines. In short, we call them soothing lines. For example, if someone says it is a moving average of 5, meaning that it looks at the average performance of 5 candles. If someone says it is a moving average of 7, it looks at an average performance of 7 candles. Then what does it do? It draws a line where that price is averagely moving. If someone says it's a 200 moving average, it looks at the performance of 200 candles, and then it draws a line of an average price of those 200 candles. Have you understood the concept of a moving average? So it draws a line of an average price of those so many candles. If it is a 21, it will look at 21 candles. If it is a 10, it will look at 10. If it is a 30, it will look at 30. Then the average price of those many, it draws there a line. Is it clear? I'll dig deep tomorrow. Is it clear? Give me a one if you have got just a picture of what moving averages are. Give me one if you have got a picture. God! My God! My God! Please don't spare anyone who understands and doesn't respond. My God, never break that agreement you told me. Don't spare. Sambaratika kwa moto, 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 sambaratika. Don't spare them. My God, don't spare them. Don't spare them. Give them the knowledge of responding. Give them the knowledge of responding whenever they understand. Thank you. In Jesus' name I pray. Now people say, I thought when that guy becomes a V6, he will be humble. He will be what? Are you me? Why? You need to change your character. I thought when you become a V6, you change your character. Because are you me? You wait when for you become. For you, when you become, be like a king. You be like a king, be like, you be like ask Tanzanians. You be like a pope. Ask Tanzanians what is sambaratika kwa moto. You ask any Tanzanian, you will answer. I don't know if Kenyans understand, but you ask Tanzanians, they will answer. You ask Tanzanians, my brother. Even me who's speaking it, I don't remember. there is one church I went in where? Let me focus here. Now, basically, you have understood moving averages. Now, tomorrow, make sure you don't miss tomorrow's class. Because when you want to make a coin that is moving up, moving averages are the perfect indicators that even exist in your royal queue that will give you more confidence tomorrow, moving averages. Now, basically, we are waiting for a pullback after divergence. When you get a bullish divergence, remember we said a bullish divergence, you have connected lower points together, then the RSI is giving you different. You find the divergence. Don't get excited. Don't get excited. This is what we are going to do. Basically, we are waiting for a pullback after divergence has appeared. We don't go immediately on any pullback. We first wait for the price to cross the moving average to the upside. Then we wait for a pullback to the moving average. And that is our trigger to trade our divergence pattern. For exercise, for example, before I go to the Fibonacci, let me bring this one. Look here, guys. Look here. You have found a divergence. Woo! Kotolo, mangungu, baludi kochana, jigani kana, dankuku, magugu. Every time Whenever there is opportunity, the robot sells. Whenever there is opportunity, the robot buys. Whenever if you don't know you, me I no go to this. Sometimes I forget. Too much excitement. Man on the head, man on the toy. Man. Where did this robot come from? Whoever says Rochu is a scam, it is okay. I will suffer with my scam. It is a scam. It is okay, my blazer. That's why nowadays I don't argue. Rochu is a scam. It's okay. It is a scam. Someone tells me Rochu is bad. It's okay. It is bad. Now I no longer say I want to prove you. I no longer prove anyone. It is a scam. It is okay. I will suffer with my scam. I no longer now argue. When someone comments, it is a scam. It's okay. It is a scam. Now look here. You found the divergence. Now the challenge, the cells are very many. So I've stopped singing. You find the divergence. Wait for the market to come above your moving average. Then after the moving average, wait for the pullback. I don't know if someone is able to understand. Wait for the pullback after the moving average. Allow the market to go down, to come to the pullback. Wait for the market. When the market breaks your moving average, wait for it to pull back as if it is going down. After the pullback, that is when you enter the market. So when you wait for a pullback, you wait for a green candle to close above, that becomes the confirmation, then make your entry. Is that clear? Is that clear? Don't get excited. Always wait for a pullback. Is that clear? 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 So even when you are using the moving averages, remember guys, you need to have what we call a confirmation. Let me say this is the line. This is the line. You need a confirmation. Either if it is moving up, you get a green candle that moves below and closes above your line. This green candle is called a breakout candle. But before you enter any coin, wait for either a green candle, a next green candle that closes above your line, or a red candle that it tests your line and it closes above, like this one. It starts, then it closes above your line. That becomes a confirmation candle. For example, let me give an example so that people you understand. Look here. You wanted to trade. You had drawn lines of support and resistance just here like this. You said, the market move, it will stop here. Then you saw it. Then you were excited that this coin could go here. This here. Wait for a green candle to close above, then wait for a red candle to also close above here. This is what I'm talking about. You need a confirmation. So the green candle broke out. It's called a breakout candle. Wait for a pullback to go above your moving average. Am I clear? And that's what I've talked about. So after the divergence, be very calm, ladies and gentlemen. Wait for the pullback. That's what I've explained here. Okay? And I've told you we don't go immediately on any pullback. We wait for the price to cross the moving average to the upside. Wait for the price to cross the moving average. Then wait for the pullback to the moving average. That's the trigger to trade our divergence pattern. Alternatively, you can use the Fibonacci to get points. It's a good option. So to close our trade, we wait for a decent risk to return ratio. When the price makes new highs, we wait for the divergence to appear in the opposite direction. So let's recap our lesson. An RSI divergence is a chart pattern that is formed when the price trend is not synced with the RSI indicator. We have looked at one that moves up and one that moves down. For a bullish divergence, we want to see the market making lower lows while the RSI making higher lows. For bearish divergence, we are watching the price making higher highs while the RSI is making lower highs. When we find a divergence, we should not expect change in the price trend, even if it is temporary. By the way, any divergence, there should be a reversal. We expect the market to change, the trend of the market to change. We can use divergences to open trades and close trades. Now, how do you trade divergence? Okay. Do you use an indicator or anything? So I think the class has ended. Tomorrow, I will do practical. 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 Because I want you to understand. Because I want you to understand. Because I want you to understand. Now, I have taught a lot, but find one clear. When find a strategy to it, okay? Right? Just make sure you find what works for you and you stick to it. And if you find that the coin is not moving to that strategy of yours that you used to trade, please don't pick that particular coin. I don't know if I'm making sense to someone. Always take your time to find opportunities in the market. I don't know if what I'm saying makes sense. Okay? So make sure you take your time. Don't say, I want to trade like Kavanda. We may not be the same. Even if I teach you, it is very hard for you to trade like me because we are different people. I don't know if that makes sense to someone. Like, we can never be the same. If you find what works for you is different from what works for me. No, when you are hunting and you find the red meat. Now, me, I'm too stupid that I don't analyze much. So don't say, me, I'm looking for. So don't say he has not done a lot of analysis. My friend, I've been around for so many long hours. So I will not trade as if I started trading yesterday. Someone say he's not connecting the points. Okay, for learning purposes. So what I'm trying to bring to your understanding that you may not need to find long downward trends that have been happening for a long time. That's what I'm trying to show in the screen. Let me even make it white. I am not looking for trends that have been going down for a longer time. I don't know if someone, me, I'm looking for a divergence to find an opportunity. So I find one here. So tomorrow I'm just sharing what we have learned, but tomorrow I'll dig deep. So I find my divergence. I'm not a person who always wants too much profit. So since I'm not chasing so much, okay, current price. There we go. Yes, I need you to wait, but since me, I'm not looking for too much money, I will first take this one. How many have understood? Since me, I'm not looking for too much money. Me, I'm not looking for 10, 30%. I first take this one. Me, I'm not looking for too much profit. You can't see. I'm not sharing. Eh? What have I been doing? Eh? Okay. So I repeat. Are you seeing now? Are you seeing now? Someone says as well. So I want to trade. So I come here. First step, by the way, before I start, my first step is to don't forget it's a top to down approach. I start from the 4-hour time frame, then I go to a lower time frame. Okay, so this is the chart, just making it clear. So before I bring indicators in play, My first step is I look at the current price, then look at the lowest price from the current price. If you don't know how to draw, I told you bring the line in the chart in your drawings. Okay, so I'll tap here, then lock it up. So wherever there is a V, I draw the line. Okay, a line, a line. If I use the V strategy, I don't even need to think so much. A line. So for me, this is enough. I am not looking to trade this coin until it goes to heaven. Is that hard? That should be your first approach before you trade. Is that hard? Is step one hard before you bring in indicators? You are dying with the RSI divergence. That should be your first step. Finding areas of support and resistance. Is that hard? Okay. Having finished that, return your chart to candles. If you are confused whether this coin will go up or down, return your chart to Hacking-Nash candles. They will give you the impression. Question: when a Hacking-Nash candle is forming either green or red candles with a wick at the top and a wick at the bottom, what does it signify? Hacking-Nash candles forming wicks at the top and wicks at the bottom, what does it signify? Reversal. Beautiful. Now, you're already in your mind, you know this coin is going to reverse to the upside. Is that clear? Okay. Step number 2, I'll now return back my indicators. So if I'm running, I must have the MACD, because the MACD is not a real-time indicator. The MACD is a lagging indicator, but it shows me what is expected in the market. With the histograms, if the red are reducing and becoming light, what does it signify? If the histograms are reducing from dark red to light red, what does it signify? The histograms, so let me just make it clear. When the histograms are reducing from dark red to light red, what does it signify? You know, all these things are very important. You look at them and see, okay, what does it signify? You cannot write uptrend. You cannot write reverse. I don't want it. I don't. They say every adult answer is correct, but those answers of uptrend should stop now on the MACD. I'm not going. Thank you. Decrease in selling pressure. You are right. Sellers are becoming weak. You are right. Buyers are coming in. You are right. Those issues of uptrend, downtrend, yeah, I will kill someone. Momentum is reducing. You are right. Buyers are stepping in. You are right. Not every. They say in adulthood, every answer of an adult is correct. How can I accept that? Now you see how you are playing smart. You now know, okay, the sellers are losing power and the buyers are coming in. Do you see how you develop your confidence? Now, you bring in the second skill we have just learned, connecting points together. So, if you want, you can use the line, but use the candles when connecting points together. Do not use the line approach. Okay, use the line to just draw lines of support and resistance. Now look here. I'll bring my trend line. I connect this lower point to this lower point. Done. Then I still bring my trend line. I come to the RSI. I connect this lower point to this lower point. Done. Okay, then I still bring my trend line, connect this lower point to this lower point. Done. Okay, then I bring this trend line. Now I see the other side have been moving up. This side I'm moving down. So here I'm moving up. So I connect. So since this one is moving up and here I was moving down, what I will do, I will change the color from red, let me say, to green. So I have the divergence. So here they don't agree. I identify by bringing a vertical line from this point. Then I also bring another vertical line where I connected to this point. So in short, this is a divergence. Now, in what we had as a class today, as a lesson, it requires me to bring in a moving average. So there are many. So I'll bring in a moving average. I'm ending the call. So I'll bring in a moving average. There are several, but I will explain tomorrow. So I'll bring in a moving average. Just for clarity. This is a nine moving average. This is, if you come here on the input, this is a 9 moving average. So maybe, but I will discuss moving averages. Maybe I can turn this to a 10, a 21. Thank you. You are tired. Eh? You still want your phone? Just wait, okay. So maybe I turn this to a 21 moving average. Meaning it will be looking at 21 candles. The higher I make the moving average, the higher it will go more. So maybe I keep it to what it was. Maybe it was a 9. Or I can even make it a 10 or a 5. It depends. All right? So remember, now, if I want to get out of this trade at the resistance above, I will wait. But if I'm a person who's trading from one line to another, just wait. From maybe here, if this is my trading approach, me, I will not wait. But if I'm looking for good profit, 6%, like this one, it has over 10%, I will wait for the candle to close above my moving average. Just wait. Okay, let me give you. Sorry, guys. But it's my point home. But tomorrow, I'll repeat this and also dig deep into moving averages. If you have been able to learn something, let me know. But tomorrow, I'll repeat the same class and also dig deep into moving averages in a better way, still again. But how many of you are on the call and now you can take trades by yourself? How many people are here? You can now pick coins and trade and make money? Let me know. How many people are here? You can go to the market, pick trades, and make money. Open up your margin calls very well. Now I have a question. Imagine, I'm just asking, imagine I learned all this and I kept it to myself. Just imagine. Think about it. Think about it. Because there are so many people who are like me. They have the knowledge and they stay with the knowledge for themselves. So imagine if you would find someone, they join you, and they also learn this knowledge that whenever they use it, you make money. How does that sound? How does it sound? Some of you are new to these classes. The reason why I'm not answering some questions is because some of you have just started. This has been a long class since January. The reason why I'm not answering certain questions is because they are for new people. Don't worry. Starting, I believe, next week, you will be starting from zero. That's why I'm not answering. Imagine, ladies and gentlemen, you would have people using this same knowledge, and whenever they use it, you make money. Would it be good? Okay, so don't stay with the knowledge alone. Make sure you go outside there and try to make this world a better place, because you can. Thank you so much. Someone is answering, how do you measure? These are tools. This is a price. You press it where you want to start from, then move your cursor above to take profit. We are going. Right, guys? It is now 8:30, and my daughter understands this is usually her morning time at 8:30. That's why she's taking over. All right, so I wish you all the best. Sorry for the interlude, but it's 9 and my daughter knows this 1 hour is hers, so she wants me off the class. So I wish you all the best. I can't continue. Yes, we are getting done. So I wish you all the best and have a good day.